best strategy, but nobody really gives you the exact strategy that you can use. Like, where do you actually jump in? Let me break it down and you will never miss a ORB trade ever again. I'll give you 2 examples of that. So ORB simply means opening range breakout. That means first 15 minutes highs and the lows. That means the market opens at 9:30, 9:30 to 9:45. That's a 15 minutes. Whatever the highest point is and the lowest point is, you're going to mark that on your chart. Now, I personally use the indicator to do so. It just saves me time. So I have this 15-minute mark on SPY towards the upside and towards the downside. Now, what I want to do is I want to see the price action, which is a 5-minute candle, close literally above this candle first. And that's the first criteria that you need. The 5-minute candle close above. The second criteria that you need is you need 2 5-minute candles. That means 2 individual 5-minute candles being independent of this ORB levels. For example, if a move is happening towards the downside, you need 2 candles independent. That means any part of these 2 candles cannot go and touch the ORB point. If you get 2 independent candles and after that, whenever it goes and retests this line, man, you can literally smack that. I'll give you an example. What happened on this SPY? SPY broke below this ORB level, this red line that you see, and a candle closed below it. Now what's happening? You see the one candle which is independent. That means this candle is not touching the ORB whatsoever. And then you see the second candle which is independent. No part of this candle is touching the ORB. Now that means if it comes back and retests this ORB, it's gonna be nice. What happened right here? Prices got rejected. As soon as it touched, it made a big reject and it made a nice move towards the downside. I mean, just check this out, bro. The numbers do not lie. It made such a nice move down. If you shorted here, man, the stop loss is literally on the other side and you have such a big reward. I can show you example on this QQQs as well. You got 2 5-minute candles.
All right. Enough talking from this guy, but like, just want to see and show you guys how much this can work or not. All right, so this is pretty popular person. I've been getting a lot of videos on the just my channel, and I want to see what really happens when we follow this strategy. So like he said, he basically marks down on 5-minute the highest high and the lowest low between 9:30 and 9:45. All right, and then wherever he gets the breakout, he waits for 2 candles after that to not touch at all that high or low where it broke through, and then the next time it came back into the level and touched it, he goes long or short. Okay, so let's say here, so as an example would be that here it break through, so we get a breakout, but then this candle touches it, so we don't want to trade this trade. Okay, so that's pretty tough to not get such things. So I'm a little bit skeptical. Let's just do it for a little bit and see what the strategy gives you, how many trades it actually gives you. I highly doubt this is a profitable or even an actual edge that you can use every day, and this is going to frustrate you if you don't find trades. I have strategies that have at least given me 2 to 3 trades or at least 1 trade in a session alone. I have barely had any sessions where I don't get any trades that I can take during like AM session, lunch macro, or whatever session you want to talk about, like PM session, last hour market on control closing, all kinds of price action. Okay, so let's check this out. Okay, so this one didn't get me any trade, so no trade. Okay, let's go 1 day back. I have this 9:30 as vertical line just so I can quickly mark the high and low. So again, we didn't get a breakout here. We did get a breakout, but the candles started to touch it, so no trade again. All right, let's see one more day before. This is the high, this is the low. We broke through 1 candle, second candle touched into it, so we wouldn't take. But see, if you would have taken this trade, which I would have taken based on some of the concepts, it would have been a nice trade. But this person basically will skip it as per what they say, and your stop loss pretty much goes at the either the swing high or potentially like the other side, which could be a lot if the market is very volatile. So this is not a strategy, this is gambling. So you see how much stop loss you have to put. That's 160 points. So you can barely take, if you don't have a lot of money in your account, you can barely take micro contacts, like just 1 contract or 2 contract, and that's a lot of pips or points. 160, that's about $320 in stop loss for just one micro contract. Okay, 1 point is $2 equivalent. Okay, every point in micro NASDAQ contracts. Okay, now let's see this one. Again, I'm just going one by one few days back. So far we have not seen any trades that we could take. This is the high, this is the low, market breakthrough, 1, 2. Okay, so if it comes back, I should take a trade. Did it come back? No. See? So I don't know where he's getting all those profitable trades from this orb, but maybe I'm missing something, but based on the video that was shared, this is either not enough information to make a trading edge and back test, but so far nothing. Okay, let's go one more day back. So again, this is the low, this is the high, this is the high. So again, it broke through, it came back twice, touched it. So again, this, you wouldn't take this trade because it went and touched this level of breakout, which again, it's false information. If you would have entered, you would have nicely scalped this move. There's a gap here. Okay, so smart money concepts, ICT. If you would take it, but I probably don't think any ICT trader would be able to trust this model. Taking the gap there, because where you want to put your stop loss, I would put it here or here, but then again, people would say there's a fair value gap. So again, we're not talking about the ICT concepts right now in this video, but if someone would go long on this, you can, and just like take this, or just like draw the Fibonacci and then take it from there. All right, let's go again, one day back. So highest high, lowest low. So where did the market give me a breakout? This, and then it went back again. So again, if you would have taken this trade again, stop loss here, it would have worked perfectly. But again, as per the strategy given to you, you have 0 trades so far whatsoever. Okay, another one. Let's go. So highest high, lowest low, market breakthrough, and then 2 candles, it now again back. Again, if you would have scalped, you would have scalped nicely in this fair value gap. But again, you wouldn't take this trade based on this strategy. I have 0 trades right now. Man, this is crazy. Again, let's see. I'm hoping I'll find at least one where I'm doing something wrong. So again, market broke through, it went in, you wouldn't take this trade as per the strategy. So again, either this is incomplete information for you to be just taking an opportunity for you to take your, I don't know if this guy sells a course or whatnot, but again, I'm not trashing him. Maybe if someone's seeing my video, tell me what am I doing wrong. So again, see 1, 2, and we never tapped back. It did tap into this fair value gap. So will you be able to take a trade based on the strategy given to you in this video? No. Would you be able to take a trade based on some fair value gap or something? Maybe. You know, you have plenty, but then you have to like hold your trade overnight. But that's okay. Let's go back a little bit further. Don't want to waste your time too much. If things are not working, then it's fine. Anyway, I think that's enough, I guess. So how many did we take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 days. Did we talk about this? Let's talk about this. So this is the 10th one, the last one. So this is the lowest low. Oh. This is the highest high. So again, as soon as a breakout, you wouldn't take this as per the strategy. But again, if it works, then you know you don't know how it works and why. There's no logic behind it. Like, what is this buying and selling pressure? No. Is this some sort of liquidity sweep? Well, if you think about liquidity sweep, the actual liquidity is here. So will you be able to take a trade? Potentially, because there was a stop hunt here, and maybe there was an SMT. I don't know, but you would be able to take this trade here if you trust this. There's a order block, so you should be able to take a buy trade here. But again, I'm not trading ICT concepts in a traditional terms as these jokers are doing these days. You can't beat the ICT concepts. They're great, but you just don't know how to do that, use them. So your win rate is like 50%. Well, I have strategies that have like win rate 70%. So you're not ICT, okay? So if you're trying to trade order blocks and all that, great. You should be able to do that if you know what you're doing. But otherwise, like these opening range breakout, those are just retail gimmicks. They don't work as if they have been presented to you in the video you saw. Maybe there's more to it. Maybe the video wasn't complete, but I have 0 trades in there, okay? So let me know in the comments what's going on. I can share some strategies related to what really works in opening range breakout strategies, but this one definitely has 0 whatsoever affinity for the market, okay? So that's it for the video, and I'll see you in the next one.